All right, let's talk about the wheel strategy and when to exit trades, because this is a question that I often receive. I mean, should we roll our positions? Should we close our options early, or should we just wait until expiration? And so just reviewing very quickly the wheel strategy, as you know, it's just 3 simple steps. Step number 1, you sell puts and collect premium. Step number 2, you might or might not get assigned. If you're not getting assigned, you start over and go to step number 1. If you do get assigned, you move on to step number 3. And step number 3 is that we are selling calls and collecting premium. If you're new to the wheel strategy, I'll link to a video in the description where I explain the wheel strategy in 15 minutes, so you can take a look at this. So the key question is right now, does it make sense to close a trade before expiration? And in order to do this, I want to show you a very specific example of a trade that I have going on right now. So on April 1st, 2022, here's what I did. I sold AMD, the 98 put, expiring on 4/8, so on April 8th, and I did that for 75 cents. So if you're hopping over here to PowerX Optimizer and look at the trade, so this is what I saw on April 1st. By the way, today, as I'm recording it, it is April 4th. So I did this on Friday, and today is Monday. So I did this for $775 per contract. And if you look at the calculator here, according to the calculator, zooming in here a little bit that you can see it easier. Based on my account size, I should sell 10 contracts. So this gives me $750 in premium. So let's go back here for $75. So that's $750 in premium. Now here is the important thing. It's a concept that I've been mentioning in my book, The Wheel Strategy, and this is the concept of the premium per day. So what is this? What does this mean? Well, as we entered this trade, we basically had 7 days to expiration. So we're taking the total premium of $750 and dividing it by 7 days that we had on expiration here when we entered it on April 1st. And this gives us, using our handy dandy calculator here, so we take 750 divided by 7 and we arrive at $107.14. So let's keep it easy. We are doing this at $170. So what does all of this has to do with, does it make sense to close the trade before expiration? Well, let's take a look at today. And again, today is April 4th, so it is Monday. We entered this trade on Friday. So looking at AMD, so here's the options chain of AMD. And if you just look at this here on a chart first, we see that from Friday on, we actually moved higher today. We opened higher, we moved a little bit lower, but now we are definitely, it seems that we are closing higher. So as you can see here, AMD is up from Friday 2.2%. So looking at the 98 put that I sold, we see that right now the last traded price is 12 cents. So let's talk about this. So we're going back here. And so the last traded price for this option is 12 cents. So let's say if I'm buying back this put that I sold for 75 cents today for 12 cents. What does this mean? Okay, so we sold it for 75 cents. And now we are buying it back today for 12 cents. So this means that our profit would be 63 cents, or times 10 contracts, this would be $630. So right now the trade was only open 3 days. I established it on Friday, and then we have Saturday, Sunday, Monday. So this is where we go back to the idea of the premium per day. We can abbreviate it as PPD. So here the premium per day would be $630 divided by 3 days that I had it open. So planned, this is what we had planned, right? And this is what I've realized right now after 3 days. So we take the $630, 630 divided by 3, and that's $210. That's almost twice as much. So what are the pros and cons of exiting today? And let's just see. So 12 cents divided by the originally 75 cents that received. So this is how much of the maximum profit, 12 divided by 75. So that's actually a healthy 84%. So that's 84% of the max profit. But let's talk about the pros of closing today. First, I'm actually collecting much more per day as I have anticipated. So I'm collecting $210 per day instead of the $170 that was planned. Number two, I'm freeing up buying power. Why? Well, because when I'm trading 10 contracts here at a strike price of 98, so this would be $98,000 that I'm tying up in this trade in buying power right now. So I would have this free, and also I'm freeing up one position in my account. And you know that for me personally, I like to trade up to 5 different positions in my account here. So right now I have 3 positions. I have AMD, DB, and TPR in this trade here account. In the Tastyworks account, I have LVS, RIDE, and ARCF. We can talk about those later, but these would be the pros. What are the cons? What are the cons of closing early, if closing today? Well, I'm missing out on some premium. So I have received $750, and now I'm giving back 12 cents. So I'm giving back $120, right? So this means I'm missing out on $120. But here's the deal. This is for the next, what do we have today? Monday. So Tuesday, Wednesday, Thursday, Friday. So for the next 4 days. So the premium per day here is actually only $30 premium per day. But here's the deal. If the market keep going up, I might not have an opportunity. So I might not find another trade tomorrow, and therefore it would be better if I kept this one, because then I'm at least milking another $30 instead of nothing. Because if I'm closing the trade today, there's no way that I can get any more premium here on this trade and taking advantage of the theta decay. So what is the solution with all the pros and cons here? So what do we do? Well, for me personally, here is my rule of thumb, or my rule that I do, okay? And this is, I will close a trade early if I can close it at 90% of my profits. So in this particular example, if you look at this, so I sold it for 75 cents. So the idea here is, if I can buy it back at 7 cents, this is when I'm keeping 90% of the max premium, right? And I will do that until expiration day. If on expiration day I have not been filled, then I usually let it go, because on that day I usually don't enter another position, and therefore I might as well keep the remaining premium. So even if on expiration day it is still at 7 cents, right? Because 7 cents here means that it is $7 times 10 contracts. So this would be $7 if I keep it another day. And of course, if I see a trade, I would actually close this and enter the other trade, but you get the idea. So the basic idea here is, does it make sense to close a trade early? Yes, and you need to look at the premium per day. And this is why, so here is what I do to show you exactly. As soon as I get filled on my sell order, and here it doesn't matter. It doesn't matter whether I'm selling puts or whether I'm selling calls. I put in a GTC order, which is good till cancel, for 90% of my profits. This way, the whole thing is on autopilot and I don't have to worry about a thing. Well, hope this was helpful. If you don't know about the wheel strategy yet, I'll have a few videos popping up on the screen right now for you that shows you more about the wheel strategy. And also, I have a video that shows you how to pick the best stocks for the wheel strategy, and I'll link to this also here and in the description. Hope that helps, and talk to you later.